Hi, everybody, and welcome to another edition of the Amicable Divorce Network podcast. I am joined today by one of my favorites, Tami Wollensak. She is an amicable ambassador for the area of Chicago with the Amicable Divorce Network. But what we're talking about today is how she helps people divorce their mortgage or perhaps stay married to it. Tami is a mortgage banker and also a certified divorce lending professional. That is a thing. And if you are in a marriage looking at that breaking up and you have a mortgage, you need to be meeting with Tami or one of her colleagues to get this figured out. So thank you, Tami, very much for joining me today. I really appreciate it.
It's absolutely my pleasure. Thank you so much, Tracy Ann. It's great to talk about this subject. It's a hot topic right now.
And the hot topic is mortgage assumptions. So, Tami, as a mortgage professional, is hearing about this every single day. I'm a divorce attorney and mediator, and I am hearing about it every single day. Everybody is wanting to assume the mortgage and not refinance for a higher rate. So, Tami, first, just explain to everybody out there from a professional mortgage standpoint, what is an assumption?
So, a mortgage assumption, this is a fascinating area because if you talk to 100 mortgage originators out there and ask them, is my 30-year fixed mortgage assumable? They would all say no. And I was one of those people that I actually did not know that the loan was assumable. Well, when you're going through a divorce, that life change creates the potential opportunity for your loan to be assumable. And what does that mean? You have a husband and wife or two spouses, let's call them, on the mortgage together, and one of them is leaving the marital residence and the other one wants to maintain that mortgage. You're releasing liability of the out spouse and you're keeping the actual terms of what your mortgage is today. That's what an assumption is. You're keeping the current mortgage terms.
But one person will no longer be named on the mortgage. Their name will be removed,
Right.
correct?
So they're
Okay.
releasing the liability of the person that is, leaving the marital residence, correct?
Okay.
And they're quit claiming off the deed, so they have no more owner interest in the home, ownership interest in the home, and that other person is full owner.
Yes. So I hear this all the time where my clients have called their mortgage company, had a quick conversation, and they have asked, let's just say Wells Fargo, for an example, is my mortgage assumable? And Wells Fargo will say yes. And so my
Mhm.
client thinks that that means it's assumable by them. And they don't do any further work. Like they've just made that one phone call. So have you been seeing this too?
This is the problem. It's like the wild, wild west out there. So yes, absolutely. So if you talk to the only person that can tell you, first of all, if your loan is assumable, is the person that you write your mortgage payment to. The servicer is what that person's called. So that company is called. So they're the only ones because they have to have a process for this. Some servicers do and some do not. Here's the kicker, though. If they do say my loan is assumable, there's things that you need to do in order to qualify to do the assumption. And that's where people are really missing the boat on because they're going to be looking at your own income, your own credit, your assets, all the things that you would do to qualify for a mortgage, but now you're removing one of the people, right? So if it
Right.
took two of you to qualify originally, now you're going to try to qualify on your own. You have to be set up to understand if that's an option for you because you're going to put it in your settlement agreement. And then if, a lot of times, especially these big servicers, Wells Fargo, Bank of America, Chase, sometimes it's a 6-month process. Six
Yes.
months you're going to sit and
Mhm.
you're going to wait, and then to only be told you do not qualify for the assumption. Now what? Well, it depends on what you wrote in your settlement agreement, right? If you wrote, I'm going to assume the mortgage in 90 days, and then if that doesn't happen, I'll sell the property. That's a
Right.
problem if you're going to have
Mhm.
to sit and wait for 6 months.
Yeah,
So,
I think there's two issues that I've been seeing. One is a client will ask, is the mortgage assumable? And they get that yes, and they think that means something, but it doesn't mean that it's assumable by you. Um,
correct.
so you still have to meet certain requirements. You still have to do some legwork. And then second, the time frame on an assumption, like you have touched on, is so much longer than
Yeah.
any other transaction I've seen. I had a client start one, never really even got forward in 6 months. They just abandoned the process, ended up doing something different because the company was so uncommunicative about what needed to be done. And so it was very complex. So,
I actually was, I told you earlier today that there was a client that came to me just recently that has until the end of this month to either do the assumption or to refinance. And she was really nervous because the servicer wasn't moving. They weren't doing anything. They're not making any headway. And
mhm,
so she's like, I have to have a backup plan. And in my personal professional opinion, that assumption thing is not going to happen in that timeline that she needs. And she knows from knowing her ex-spouse, it's going to cause a problem for her.
mhm.
So she's like, backup plan in full speed ahead.
Yeah, I definitely would recommend a backup plan if you're investigating an assumption. I think some of the questions to ask are, yes, is the mortgage assumable? But then ask some more questions. What are the
Yes.
terms? What
Yeah.
do I need to start doing? And
Mhm.
how long can I anticipate that this will take?
Right.
And then add some time onto that in a legal document because you will need some grace when you're dealing with these financial institutions.
I say that as well. And then the third question that would ask, because I've seen this kind of all across the board, is are there any fees to do this? Because sometimes I had somebody come to me and say it was going to cost them $10,000 to do the assumption. The company was going to charge points, and what a point is, it's a percentage of the loan principal balance, and you can't roll it in like you would with a refinance. You would actually have to write a check to do it. And this particular person didn't have the resources to do that. So fees, timeline, and what the qualifications are three really important questions.
Yeah, I didn't know about that last one about the fees. So that's definitely just another problem to add to the list about these assumptions. So tell me if this is true or false. I don't know, but I have clients that have the idea that if their income was not used to calculate their ability to get the original loan, that they will just be removed from the mortgage, that the mortgage company will just grant this assumption. Maybe they didn't have a job at the time or something. So they're like, I was only added because I was a spouse. So they will just take me off. Is it that casual?
False. False. No, they're not going to release somebody from the liability without the other person being able to prove that now, today, they can still qualify on their own for that mortgage. Mortgage companies like two people to it mitigates some risk when you have two people as opposed to one that's responsible for the liability or the mortgage.
No doubt. I would like to have multiple people that I can go
Right,
after for, especially, with different economic circumstances. You want to make that they want to make sure they're going to
right,
get paid. That's very
right.
reasonable.
If one
Um,
person loses their job, then you have
yeah,
the other person as a backup plan or
yeah.
whatever, right?
So I would recommend if you're going through a divorce and you're investigating an assumption, you need to do all of the things that Tami just articulated, and we will put them in the show notes to this, the top 3 questions that you need to be asking. And I'm going to add to that. I'm going to say, have them put this in writing to you. Because
Yeah.
what I've seen as well is when a client was investigating an assumption, they kept talking to different people that kept telling them different things. And she would ask them, she did a great job. Can you send me an email that memorializes this? And they did that. And I am not joking that every single one was different in regards to who she needed to talk to, what she needed to provide, what the timeline was, all these different things. And so this is going to be in a serious legal document where somebody can be held in contempt of court, which is quite serious, and it involves your housing. So do everything that you can to get the answers to these questions.
That is great advice, I think. And I've seen that as well, because a lot of times the person that's manning the phone, the customer service person that you're talking to at the front end, they're just checking a box. They're asking you a couple questions or checking a box and saying, yes, here's the information, or yes, that's it. And then, you're like, okay, hey, thank you. And you hang up. So yes, you need to make sure that you run down all of those paths for yourself to make sure that you know not only what that process takes, but I think what you alluded to earlier, have a backup plan for yourself and make sure that you put that in your settlement as well. If A doesn't happen, then B will happen.
Yeah. So if you're investigating the assumption, you want to have your refi as a backup before having to place the home on the market for sale. So I think the moral of the story today is don't assume. You can get an assumption, or it will make a you know what out of you and me. And so, Tami, thank you so much for explaining assumptions to us today. If I know that you can work, am I correct, with loans in 46 states?
Actually, all 50, yeah.
All
So I
50
work for a
states.
bank
So
that's all 50 states. I'm happy to answer any questions at all about this process or a refinance process. I do a divorce mortgage plan. So I really help people structure what their options are so they don't take any counterproductive positioning in their settlement agreements.
And I always tell my clients, if you are going through divorce and you have a mortgage, it's time to use a specialist like Tami, a certified divorce lending professional who has experience with divorce. They often give us guidance on how agreements need to be worded, reality check us on these timelines, because everybody wants the client to be successful. So use the right people for the job. So if you are in the United States, you can use Tami to help you with your loan. And Tami, how can people find you?
So my website is takeorleavethehouse.com. So takeorleavethehouse.com. I have my calendar on there. I have a lot of information on my website, and they can schedule with me at any time. And it's complimentary to do divorce mortgage planning.
And complimentary means free. So
Yes,
that
it
is
does.
really great to find out what your options are at no cost. You can also find Tami on the Amicable Divorce Network website under our membership directory. And Tami, thank you so much for your time today.
My pleasure. Thank you so much, Tracy Ann.